Comfortable and satisfied with the year behind us. As you see, we are happy to come out of the recession of 2009 and 2010. The company is definitely resilient. So it brought us a lot of revenues in. What did we do with the money? Our GP stayed up very nicely, but we made a conscious decision to, coming out of the recession, to invest quite heavily into particularly two areas. The one is research and development. That has gone up by 27%. And we did that by spending a lot of money on people and obviously on developing software. Secondly, it was the international. We know that a large percentage of our future growth is going to come from our international market. You may know we're in 50-odd countries. So we have invested in putting own operations down in these countries with very good management teams, and that's really where we've invested the money. That's why you'll have this mismatch between the percentage sales growth and the percentage profit growth.
Okay, well, let's touch on the revenue splits.
Yes.
South Africa accounting for around 56%,
Yes.
foreign accounting for around 21%, R&D and manufacturing
Yes.
accounting for around 22%. Some say that the South African market is already ex-growth. Would you agree with that? And how do you plan to balance the revenue going forward?
No, not at all. We are quite excited about the South African market. There's huge potential over there. We've got two legs. The one is the fleet management leg, and there's still vast opportunity, particularly because we are moving into the broader sense of machine-to-machine communication. It's not just purely vehicle tracking. We've obviously, as you might see, we're adding quite a few additional business opportunities to that. So that will certainly, we are excited about the South African market. On the consumer side, we've entered the consumer side or the stolen vehicle recovery only about 6 years back. However, one of the most exciting highlights of the year was obviously our deal with Discovery Insurance. It holds a lot of potential. We're very excited about that. So there will certainly be very nice growth coming from South Africa. However, on a global scale, as you may know, there's, compared to the rest of the world, there's very few vehicles in South Africa. Even in markets like Brazil, there's probably at least 5 or 6 times as many vehicles as in South Africa. So yes, of course we have got to grow internationally, but I can assure you we are definitely not going to ignore the South African market. We are comfortable as we sit here. It's not a question of post-growth. In fact, we are very excited about growth opportunities both here and internationally.
Previously, one of your strategies, of course, was to increase the annuity revenue. It's now grown by 16% to around 47% of total revenues. It's a strong number that we're looking at, but is it covering your overheads completely?
Yes, we are comfortable that that level certainly is covering the basic overhead structures that we need to do or that we need to reach within the business. Obviously, we need to understand that as far as our investments are concerned, we've invested quite heavily into R&D, and we've used a lot of our working capital, in fact, to build our rental book, which you might have seen. So, looking at our revenue, you've got to understand that our revenue growth in the future certainly is going to look much more at the recurring revenue side than otherwise.
Operating margins at 11.7% from 13.4% previously. Operating expenses across the group rising by 24%.
Yes.
We know that because of the international expansion that you've been embarking on. What do you foresee going in the future? Can we expect operating expenses to increase to this extent going forward? And we also know that you a massive focus for the Middle East, the Southeast Asia region, and you've also opened 5 new branches in the UK.
Yes. This was our investment phase. We are very comfortable that we've invested the money. Now we need to start mining them. So I'm very comfortable that from a headcount perspective, from a fixed cost overhead perspective, we are geared for growth. And the whole management style going forward would be to see that we manage that growth very, very sensibly. In fact, to see that our cost growth should be much lower, obviously, than our revenue growth going forward. We are comfortable that we will be able to achieve that.